right, for more on surging mortgage rates and the housing market, let's bring in Skylar Olson, chief economist at Zillow. Skylar, great to have you with us.
Yeah, thanks for having me.
What finally gives here? I mean, supply-demand dynamics keep housing prices high. People can't afford to buy. I mean, at some point, something breaks, right? What is that?
Yeah, I mean, I think as mortgage rates have continued to go up, as opposed to trending down as maybe 6 months ago we were talking about, we were at least hoping for, we've continued to see new listings pull back. So you're looking at around, 0.25% down from what was normal in terms of the homes that are dropping into the market. So Diana is totally right there in terms of it's a supply and demand imbalance. So I agree as well. When we're thinking like what has to give, the owner has to have an incentive to sell. If I have that low rate, it's not a financial opportunity from the mortgage market that's going to incent me to move, right? It's a life fundamental. So it's either the time happening of getting divorced and having kids, or it's job loss. And I think that's one of the reasons why right now we're it's kind of confusedly optimistic, which makes mortgage rates go up because we don't need those safe assets, and they're related, the 10-year. But at that same token, that's going to keep the activity low in housing markets, in the existing housing markets.
Is there a magic number on mortgage rates where you see, deals clearing, an increase in listings, an increase in deals in general?
Yeah, this is the magic question. At Zillow, we're tackling this in a lot of different ways. So every quarter, we're asking existing owners, are you willing to or sell in the next 3 years? Right now, that is highly sensitive to the rate the owner holds. So the higher the rate is, if they have a rate above 5%, for example, they are twice as likely to want to sell within the next 3 years. So not everyone is as deeply locked in. When we think about what is that magic rate, I also think about affordability. So what share would that typical mortgage payment take out of a typical income, nationally speaking? Now that we're up, at 7.3, that share is close to 40% if you only have 10% down, and it's close to 37% if you have 20% down. That's close to not being able to qualify. Once you drip down to, say, 6%, it gets a lot more relief.
Karen, thanks for being on. So we talk about the 30-year a lot, but what is the number that most mortgage holders or borrowers, what is the actual amount of how long of a 7 year? What is it, and what rate, and when did they get that, and how quickly is that loan aging?
Oh, yeah. I mean, so pre-pandemic and leading up to this, a vast majority of people did get that 30-year fixed rate loan. We had a very small share of buyers during the pandemic, certainly because of low rates, but even pre-pandemic, that were getting adjustable rate mortgages. So a vast majority of the folks that, were hoping to lubricate and, as their life progresses, they'll release it. They do have that 30-year fixed rate loan. The typical amount of time that someone tends to stay is actually much less than that. It, of course, depends on your age and your time of life, but then you're just thinking about a bit more of a decade. So in the U.S., we do over-insure that housing payment with a 30-year fixed. But to that end, those that are, you can see why they did that, the benefit of someone that locked in a year ago.
So you work at Zillow. You don't sound very optimistic, Skylar, I have to tell you. You actually sound pretty sober about this market. I'm very sensitive to inventory.
Yeah, I'm very sensitive to inventory. We're talking in generations when we talk about housing. When we talk about fundamental housing demand and the strength of that, we're talking about the size of younger adult Americans, the millennials, that honestly have the similar aspirations to previous generations. They are facing very different realities, both in the number of homes that are out there to buy, but also in the dollar and cents of it all. Right. So, yeah, I'm pretty sensitive to the lack of supply.